Seems like everybody wants a piece of the next big tech IPO even before they hit the public markets. Trading in shares of private companies like Facebook, Twitter, and Groupon are exploding for both buyers and sellers on secondary exchanges like SharesPost and Second Market. For insights on this evolving market, this rapidly evolving market, we're joined by David Weir, the CEO of SharesPost, former managing director at JP Morgan. David, welcome to the show.
Thanks, Emily. It's great to be here.
Okay, so let's start with this. On January 28th, the valuation of Facebook surged to $83 billion. Just days later, it dropped back down $30 billion. Is SharesPost really a reliable provider of these valuations?
Well, I'm not sure where you're getting those particular statistics, but the transactions that happen in the SharesPost marketplace are all determined between a willing buyer and a willing seller. And so if you believe that the definition of a fair market price is a price that is determined in an arm's length transaction between a willing buyer and a willing seller, we believe that the transactions that are occurring in our marketplace are valid and fair market prices.
So you don't have access to these companies' financials. What kind of metrics are you using to determine these valuations other than the prices people are willing to pay?
So just to be clear, we don't actually determine any prices. Once again, all we do is bring buyers and sellers together through an online platform. What we try to do is provide enough context for those buyers and sellers to be able to make informed investment decisions. And we do that through a number of vehicles. We have third-party research that is available on a wide variety of companies right now. We have 8 different research providers that are offering about 250 different research reports available for download on the various companies that are available in our marketplace. We post in real-time transaction data that is transparent to all of our buyers and sellers so that they can see exactly what transactions are occurring in the stock, how many shares are being sold, and at what prices. We think this kind of transparency is something that has been lacking in the private company stock market in the past.
David, what percentage of the volume on your market, if that's the right noun to use, what percentage of the volume is Facebook?
Well, Corey, I would estimate that in any given week, the volume in Facebook probably represents somewhere around 50% of the volume in our market. It's obviously a highly visible name from a variety of standpoints. It gets a tremendous amount of attention from the media. That said, over the last 6 months, we have facilitated transactions for over 30 different companies in the marketplace. So although Facebook and some of the other social media names do get a lot of the attention and get a lot of the transaction interest, there's a much broader and deeper market that's developing here.
So to drill down a little deeper then on that, if 50% of your trades are in Facebook in a given week, again, rough numbers, how many shares are trading in a week and how many trades are there in a week? 'Cause I'm trying to understand how much trading is actually happening there.
Sure. So it's really highly variable, Corey, and the reason it's highly variable is that one of the important mechanisms that we use in trying to discover a fair market price are sealed bid auctions. So, for example, last week we completed an auction of 80,000 Facebook shares. The clearing price for that auction was about $33 a share. So there was a tremendous amount of activity in Facebook last week that was driven by that particular auction. So in a week where we're having an auction in Facebook, then the level of activity as a percentage of the total volume would obviously surge.
But that was just 30,000 shares, you said?
It was 80,000 shares.
80,000 shares. So correct. Compared to an exchange like a NASDAQ or New York Stock Exchange, where 80,000 shares trades like that, this is a very different market in terms of price discovery.
Oh, absolutely. This is the liquidity in these shares is a small fraction of what you would have for a typical publicly listed stock, and so it is a speculative investment because of the constraints on information and disclosure, as well as the lack of liquidity, and that's why the market is restricted to accredited investors only.
As I understand it, companies have a right of first refusal to turn down potential buyers. How often do companies exercise that right?
Again, highly variable, depends on the company. It depends on the prices that are being offered for the shares of the company's cash balances. And so the answer really to that question is highly variable. But you're right, every venture-backed company typically does have a right of first refusal on the shares. And so we facilitate the processing of those transactions for buyers and sellers to make sure that the notice is given to the companies and that all of the rights of both the selling shareholder as well as the company are satisfied.
We know the SEC is looking into the practice of trading private shares on these private markets. Do you think that there should be more regulation of this practice?
Well, the market is actually highly regulated. It is governed by the securities laws and a variety of FINRA regulations. And so the idea that it's not a regulated market right now, I think, is misunderstood. It's a highly regulated market. We have worked even before the launch of the company with our attorneys and regulators to make sure that all of our activities are compliant with those laws.
All right. Thank you so much. David Weir, CEO of SharesPost. Very exciting to watch these secondary markets. Thanks for joining us.